YouTube takes a little bit longer.
Hey everybody, welcome back. It's our afternoon special. And what's so special about this afternoon?
I don't know, what's so special?
Well, you and I are here, that's what's up.
Dude, that's like that.
Well, not you.
You
and
carry
I.
it for a little bit.
Them and I. I used to carry it a little bit. You're funny. All right, everybody, you know the drill. You're going to call, you're going to ask us questions about real estate. You're going to ask us questions about loans. You're going to ask us questions about whatever pops up on the screen. Who did it? Epstein, who did it? So you guys know the drill. Let everybody come in. Everybody come on in, have a seat. Come on in, have a seat, everybody.
Rates have gone up. Rates have gone up recently. They went up. They went up. They went up in response to
Everybody come in, have a seat.
the Federal Reserve freaking out just a little bit. They went up. They went up. They went up.
Come on in, guys. Have a seat.
What are they? Pull them up.
You don't remember them?
I think it's 5.75. We got alert to lock just a few minutes ago. Did you see that?
No, I didn't see that.
Yeah, we got an alert to lock, so that might have changed it since then. But rates have gone up. But the reason they're going up, it's not because the chairman of the Federal Reserve has increased the prime rate, still the same. So it's not because they've increased the prime rate. It's because the uncertainty in the market has crept back in. And as the uncertainty creeps back in, the banks need to make sure they make money. It's as ugly as it is, but they have to make sure they make money. So in order to ensure they make money, they pad the front end of it, which means the 10-year yield traditionally has about 100 to 150 basis point spread between the 10-year yield and the actual mortgage rate. But when there's uncertainty in the market, it's gone as much as 250 basis points and held for a very long time.
Hi.
So as soon as things started coming down, then the uncertainty went away and it looked like we dropped 100 basis points. But the truth is, it just dropped that uncertainty spot. Now that the Fed has spoken, says that they don't anticipate anything even in the March meeting, the uncertainty is creeping back in the market and rates are kind of creeping back up. 2 weeks ago, we were quoting 5.25. Right now, we're quoting 5.75. That's New American Funding website is quoting that. So there's a lot going on. Now, there's two ways to look at this. One of them is, hey, I won't be able to buy as much. The other way is it's still a buyer's market, meaning that if you are actually out there looking for a loan and you're actually trying to buy a house, this is actually good for you because you've got a little bit of time. Around third quarter, when we believe the interest rates are going to start going down, there's going to be an influx of buyers and there's going to be a lot of people trying to buy that house. So, kind of good news for you.
You guys know the drill. If you're interested in buying a house, our phone numbers are right here. You're going to shoot us a text. Text the platform that you're on, or the phone numbers are right here. You can screenshot it, or you can go to the link up top and click apply now and get started on your home loan process.
How soon? When is third quarter? Good question. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter.
I wish I had TikTok in 2020 before I went to put my foot in this mortgage thing because... What's up, KDZ?
Esperanza, I want to hear about your story.
I didn't hear anyone to explain
I
anything.
know, right? This is good. I'm telling you. And there's a lot of things that I teach here. What's up, KK? Great to see you. Hey, Esperanza, I think you're a loan officer. If you are, great. I hope I can teach you something. Listen, I've been in finance since 1992. And when I joined the mortgage biz, I realized there's a lot of people who know one part of the mortgage biz, but I've never met anybody who kind of understands the big picture. It's really difficult. And if you find somebody, you can at least go, oh, I didn't even know that existed. Now I can go learn. I can go learn about what really happens in the mortgage biz. Like, for instance, when somebody first taught me about the front end of a mortgage and the back end of the mortgage, I'm like, what are you talking about? That's crazy. And then they told me real simple, hey, the front end is where the bank makes money right up front. And that's how you pay the loan officer, and that's how you pay the processor and the underwriter and everybody in there. And roughly they say there's 300 basis points in there. So 300 basis points on the front end of the loan. But the part I didn't know about was the back end of the loan. As soon as they fund that loan, they sell it to a servicer. Now, depending on the type of loan, if it's conventional, USDA, VA, FHR, whatever, they sell it to a servicer, and those servicing rights can go from 150 all the way up to 700 basis points. Crazy. So just call 300 basis points. So that means On the front end of the loan, there's 300 basis points. On the back end of the loan, there's 300 basis points, and that's just the loan side. If you look at the realtor side, everybody kind of knows it's 3% for the listing agent, 3% for the buyer's agent, which means on a $500,000 loan, there's $30,000 on the real estate side and $30,000 on the loan side. That's $60,000 on transactions. Now, on a good month, when Chris and I are killing it, we're funding a loan a day. If you do the math on that, it's just insane. And it took me a long time to figure this out. And there's still little tiny pieces that I don't quite understand. I always say, hey, if there's somebody who knows more than me, please teach me. Please. If not, sit down. I'll teach you something.
Miss Real Estate, everyone needs to tap the screen to get your likes up.
Tap, 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 guys. Hey, we appreciate you guys. Let the algorithm know we're trying to get you a house. Thank you very much for seeing us on Facebook, Instagram, TikTok, and YouTube.
Esperanza, just screenshot these phone numbers. Text us, call us. Either of us can help you.
Yep, we're here for you. And by the way, we have a lot of, we've been getting a lot of loan applications, partially because of our social media presence. Because of Facebook, Instagram, TikTok, and YouTube, we've been getting a lot of loan applications, and we've enlisted our team to help us. So you can always talk to us, but so that things don't fall through the cracks customer service-wise, we have licensed loan officers on our team that are helping us 100%. Let's name them real quick.
All right, Jerry, Sean, Aurora, Gordon, Ryan, Martha, Lee, and Chris.
That's it. Yeah. So there's a bunch of us here. We are helping you, trying to get that house in 2024. KDZ. What's up, KDZ? Love to see you in here. Love to see you.
Josue, what do I need to do to get into the mortgage business?
First you need to do is get some real tough skin, Jose, because even if you know what you're talking about and you put it out on social media and you go live and answer the questions, you're going to have a bunch of haters coming in and telling you you don't know shit.
You can't do that.
You don't know anything.
That doesn't exist.
You're not even live.
Did you know that this exists too?
After you know you have thick skin, the next thing you have to do is pass the NMLS test. The NMLS is National Mortgage Licensing System. You have to go to NMLS, put it in YouTube, you'll figure it out. It's a pretty tough test. It's pretty tough. Once you get through it, you do have to pass an FBI background check. So, if you've got anything with moral turpitude, meaning that you are not trusted with money or you've hurt people in some way, they probably won't let you get a license. But if you pass the moral turpitude side and you pass the test, that's the easy part. Then you become a loan officer, and that's hard. And I had this conversation with somebody not that long ago. They're like, why is it so hard to get someone to teach me? And I said, here's why. Let's say I teach you right now, brand new. Let's say you're Amy. And Amy, I bring you in and I teach you, okay? Is there any question that as soon as you know what you're doing, you're going to go out and compete? And she goes, no, of course not. That's what I'm going to do. Why would I train my competitor? Oh, I never look at it that way. Well, let me give you one worse. Hey, I'm going to let you have a relationship with my client and my realtor. Now, when you go off to compete with me, the client and realtor can literally go, I like Amy better than you. I'm not going to. So why would I train somebody like that? Very difficult. Very difficult. Cool. Anyway,
why would you say that, KDZ? Elaborate on that.
Tell me.
She said, how did Chris pass the moral turpitude
I have
test?
no idea. I ask myself that every single day. I'm like, how'd you pass that?
Why do you ask yourself that?
Why you pass that?
And why do you ask yourself that?
Why you pass that?
Why do you ask yourself
I've
that?
noticed-
Every day.
Yeah,
every day.
single day. Shoot, I would allegedly say that at some point we hid vehicles from the cops. Now, I'm not saying they were stolen. I'm not saying they were trying to be repossessed.
Why do you say me and then say we?
Anyway.
If you've lived life a little bit, you've had to do a couple things to survive.
You've had a couple of things.
Josue, just sign the non-compete.
No, it doesn't matter. If it's a relationship business. You can't say, if somebody says, hey, I like Amy better than you, what are you going to say? No, sorry, can't work with Amy. Yeah, right. We have one of our guys who, very big loan officer, like good years, makes over $1 million a year, had an assistant with him for years, and they were like really tight. And the assistant said, hey, I'm going to take off on my own, and we're going to let the realtors choose whoever they want to work with. Some of them went with the assistant. Even though there's a non-compete, you're not supposed to do it, it's all wrong, it's still a relationship business. And because this assistant had great relationships, he took the clients. it's very difficult.
Yep.
So, if you're going to do it, the most important thing you can do is pick a good mentor.
Yeah. And Esperanza, why is your house coming apart? What happened?
What?
You use good glue?
So,
Why do underwriters take so long to approve an FHA loan? Asked Derek.
they don't. FHA underwriters usually don't take that long. They usually take, in this market right now, 48 hours. However, if things weren't submitted correctly, or it hasn't even been submitted because they're trying to get everything tight enough to submit it, they're going to tell you it's with the underwriter. But the truth is, once the underwriter gets it, there's actually pipelines and turn times. And right now, if I give an underwriter something, if it takes them longer than 48 hours, I call managers and I say, hey, listen, can you switch this to another underwriter? They'll switch it fast because there's not that much business going on in the mortgage biz right now.
Where are you guys? Can you help in Texas? Miss Real Estate wants to know.
Miss Real Estate, not only can we help in Texas, my primary residence is in Texas, and I just closed a loan in Texas today. Very happy about that. Very happy about that.
I know you're messing, KDZ.
I could never be a lender. I tell you what, I've seen the realtor side, I've seen the lender side. I see the pros and the cons of either side. Sometimes it's easier to be a realtor. Sometimes it's easier to be a lender. It's strange though, because when refinance happens, and then we get through that refinance season, lenders are making money hand over fist, man. Everybody's refinance. Everybody's calling for a lower rate, and it's easy.
Esperanza, who is SCRA? What's SCRA?
Scara?
Scroll.
Scroll.
Josue.
Who's Scroll?
Can anyone sign up to take the NMLS test? Can anyone sign up to take the NMLS test?
If you don't have any felonies, yes. If you have a felony,
anyway.
No, if you have a felony,
You
they
can't
stop
pass
you.
background, but I think
Yeah,
I think California will allow you to pay for whatever you want.
NMLS is national. It's not the California test.
I think the nation will
The
let
nation,
you spend
yeah,
whatever-
they
Have
need
you heard
money.
of this little organization called the IRS?
Yeah, they need money.
I have no problem with you
They
sending
need
them stuff.
money.
No problem. Miss B, can you get a better rate with your local credit union?
Sometimes, yeah. The problems with the local credit union is they don't all carry the main lines. Credit union is a different thing. It's a union of everybody who joined. But because of that, sometimes they don't conventional, they don't do FHA, they don't do Fannie, they don't do all the stuff, and they don't do zero down programs. But sometimes they're better. Occasionally I'll get a credit union in a situation where I'm like, I can't beat that. Most of the time I can compete and beat them, but sometimes it's just head and shoulders the better.
JZA5, can I refinance without paying closing costs?
No, but if you're talking to the wrong guy, it'll make it look like you did.
Yeah.
They'll build it into the loan. They'll say, hey, no money out of pocket. Don't worry about it. You heard no closing costs. No, there's closing costs. You know why? Because that notary's not going to show up for free and sign the documents
Why
again.
not?
Well, because she wants to be paid.
Oh.
Escrow wants to be paid. When they do that appraisal again, that appraiser isn't doing it for free. Somebody has to bear these costs.
Why don't you?
I don't. The loan officer needs to be paid. The loan officer gets paid. The bank gets paid. I don't care what they tell you. They're getting paid. Now, the way they spin it is they say, hey, no money out of pocket, which means, let's just say there was $3,000 in costs and your loan was $300,000. Well, they just make your new loan amount $303,000, so it's built onto the loan. You just pay for it over 30 years instead of immediately. What'd you do? That was crazy, dude.
It's the Chris and Lee Credit Union, Team
What?
Sanchez. That's the only one we can't beat.
What? The only one we
Chris
can't
and
be.
Lee can't.
We got lots
The
of questions.
Chris and Lee
Hey, we appreciate
Credit
you guys. We're
Union.
trying to get you a home in 2024. Primary residence, second home, or investment property. Thank you for watching. Throw your questions up there, even if they're tough. Even if you're a hater, come on, guys, let's do it.
Derek Baker, I think they're still waiting on the appraisal, which was done on Monday. Likely, if you don't have an underwriter answer yet. Yeah, there you go. You already kind of know the answer. User 9252, minimum down payment for an investment property.
20%.
Minimum down payment for an investment property.
By the guidelines, 20%. There are occasions where you can do, can you do an 80-10-10 on a investment property?
I'm not sure.
You can do an 85-5. So it's 20%, but sometimes you can borrow a little bit more on the second on a second loan, but you do have to report it. You have to calculate it into the DTI and make it happen.
Doing it right, it's 20%.
Yeah,
You can do 15.
Yeah, 50.
Out the gate.
Yep.
That's what I mean, 15.
Oh, yeah.
What's the average rate for a home equity loan with 750 credit? HELOC, 8.5, 9.
Yeah, HELOCs are rough, man. Right now, well, New American Funding is putting out 5.75 right now on a 15-year. 5.75. And 6.25 on a 30-year conventional. 5.875 on an FHA 30-year. Now, that's the perfect scenario. People are like, hey, can I get that? Well, if you have an 800 FICO score, you have a 24 DTI and 40% down, probably, yeah. But if you don't have all of those perfect scenario, maybe not.
Yeah, and you guys should know that everything was looking real good with rates. We were looking like we were getting in position to have a little drop off, and then it went like this.
It freaked out. In the last probably 7 days, freaked out. It went up 50 basis points. I heard some other bankers say 85 basis points.
Some hit 100.
Yeah, you think so?
Yeah, they were pricing it, yeah.
Okay.
What about Illinois, man? You do Illinois?
Oh, we do everywhere. We do all 50 states. For a long time, we used to have to say everywhere but New York. But about 10 days ago, we got licensed in New York. We haven't done our first loan in New York. I'm excited to do my first loan in New York. But all 50 states, we're here for you.
And if Texas does become its own country, are you going to be able to do loans there too?
Oh, no, man. I have to
Probably
figure that
not.
out.
So if you live in Texas, get your loan now.
Yeah, hurry.
Before you guys leave,
Uh-huh.
Esperanza Reyes, know everyone since they bought it was already coming apart. I called to report it and they wouldn't do nothing. So yeah, that sucks.
Is that the underwriter one?
She said her home was falling apart.
Oh.
So here's the good news, Esperanza. Not every home is the same. There's some pretty good ones out there.
So, wait a minute. Did you have a good realtor? Esperanza, when you bought your house, did you have a good realtor? Because I'm very, very big. Oh, there's nothing there. I'm very big on making sure you have a good realtor because realtors know how to look for stuff that you and I don't, our eyes don't look at that stuff. So when they go to a house, they look at contracts, they look at, histories, they look at different things. I'm very big on having a really, really, really good realtor. I bought a house in Texas not that long ago, absolutely use a realtor. I sold a house in New Mexico not that long ago, absolutely used a realtor. Even though I have a real estate license, I'm in the business, I know people, and I know how to do it. Still use the realtor each time.
Tips for increasing credit score. Josue wants to know.
Okay, so if you're trying to do dramatic increases, you go to somebody like mom, dad, somebody that's got an 800 FICO score, and you say, hey, mom, dad, can you add me as a owner or authorized user to your credit card? And they say, yes. Immediately, your credit score will jump 40, 60, 80, 100 points almost immediately because you're riding their 10 years of perfect payment. Other than that, you have to make sure that your credit card payments are 30% or credit card balances are 30% or less than your available usage or available credit.
Yeah, that's right.
So there's a few things.
Increase your
pay your bills on
trade
time.
line limits. So if you have a credit card that has a $200 limit, get that thing increased if your credit's good enough. So there's a lot of different ways. But here's what we could do. Here's absolutely what we really could do, Josue, is we could do a credit simulator on you. So if you come to us, we'll pull your credit. We'll work on this little machine that'll figure out how to get your little moves that you can make and get your scores up without having to hire a credit repair person. Or if you need credit repair, we can get you that too. I don't know. U.S. Department of Housing and Urban Development Places sent me a letter. So I don't really know who has any info on the contract. You're asking about the agent. She's like, who's your agent?
How did you buy the house?
She doesn't know. She forgot.
She doesn't know how you bought the house?
Okay. Steve Sanchez is laughing.
Okay.
Elizabeth Preciado, what are the minimum requirements for FHA?
Perfect. I'll give you the quick ones and then the hard ones. The quick ones, 580 FICO score. That's it. 580 FICO score. And I can push you all the way up to a 56.999 DTI on an FHA. Now, if you have a lot of money, I can go down to 500 FICO score. Other than that, we're ready to go. Has to be your primary residence. Let's do it.
2-year work history, 3.5% down. We have programs if you don't have 3.5%
I forgot
down
those part.
too. Yeah, the whole money and
I forgot that part.
job.
Yeah. I forgot that part.
That's it. So he's right. 580, 2-year work history, and 3.5% down. If you don't have 3.5% down, you need a 600 or better credit score because we have a program for you.
What kind of collection accounts stop you from getting approved for a home loan? Probably only one. Only one. Child support.
Stop
Everything.
You?
Yeah, if you don't, sometimes
What
the
if you
child
could
support.
solve that?
If you can make payments and the county will agree to the payments, then yes. IRS is easy Because if, let's say you owe $50,000 to the IRS, you just call them up and say, hey, I'd like to pay you $500 a month for the next 9 years. They say, okay, that's solved. I got to get 3 payments. You're good to go. So it doesn't stop you. But I've seen situations where somebody has $60,000 in child support in arrears, and they will not take a payment plan. They want it all. They want it all. So.
Oh.
What?
Student loan collection. Student loan.
Okay.
Federal debt collections.
Okay.
Are a pain in the ass.
Pain
in the ass. So yeah. So that one and that one.
Yep.
So shout out from P-Town, Pomona.
Pomona. Shout out to Pomona.
Crystal, 20-year work. No job during pandemic. Working now 1 year, 6 months using VA loan. Do I have to wait 2 years? No, Crystal.
Let me double.
Not.
Ask for a second opinion.
I want a second opinion.
No, you do not. Let's get you a house right now.
There's 2 opinions from 2 licensed loan officers born in 2 different places. That's good enough.
Cool.
Carl, real estate agent in Indiana, right here.
Respect, Carl. It's a tough business, man. Keep it up. Hopefully you're making millions.
The Chuga Express.
The Chuga.
I'm in a $5 million scratch winner. Does the money have to be in the bank to buy a house?
I don't know.
Let me see that ticket, man.
Yeah, let me see that ticket. Yeah, you better. I could knock you out and take that. I'm gonna lose my license for $5 million.
I gotta see it in person.
Yeah, gotta see it. Well, let me give you this really happened. One of my friends, realtor, went to Las Vegas, always went to Las Vegas, loved Las Vegas, paid, and then one day won millions, like millions. And I was like, holy shit. And he's like, hey, I want to live in $1 million house. I'm like, all right, cool, let's get you qualified. And I'm like, well, here's the problem. You got millions in the bank, but you only make $100,000 a year. They're like, yeah, but I'm rich. And I'm like, yeah, you can write it all cash. But if you want to apply for a loan, I need income. And he goes, well, how do I get income? And I said, there's no way for me to do it that way. Let me show you a way that I can do it. So we took a certain amount of money and we did a SPIA, single premium immediate annuity. And we put in, let's just say $500,000, and we made an extra $10,000 a month come out for the next 50 months. As long as it's over 36 months, then I can use it as income. It's called depleting assets. And so we put it into annuity, and we said basically we're taking $500,000, moving it from your left pocket to your right pocket, but doing it in a stream of income on a monthly basis. And with that, the underwriter took it. We got him. He lives in $1 million house.
Nice.
Did happen. True story.
Miss Real Estate. I'm a realtor here in Houston, Texas.
Houston, Texas.
Hey,
Love it.
Carl and Miss Real Estate, do me a favor. Send us a text message with this same exact data, because you know what? We got clients all over the nation.
Yeah, we get them all the time. Yeah, we're always looking for good realtors. We're looking for people that we can trust, answer the phone, and know their stuff. If you're new, I'm cool with new. Just tell me you're new. And that way I can say, hey, you might want to check with the broker on this, because I'm going to assume you're a professional, you know what you're doing, and we work together on a client. Let's get those clients into houses.
Okay, Esperanza, what else you got here? I don't know how they put our credit score together and our disability income. We both are disabled. Yeah, I don't know either. Who put you into a home? Let's start there.
Yeah.
Miss B, me again, LOL, looking into a $100K for a home improvement project. Should I wait in California?
What do you think?
Is that HELOC?
I think so. HELOC, yeah, I think so.
Should I wait? I mean, looking into a $100K home improvement. What's the home improvement? What are you trying to do? You trying to add an ADU or something?
Because if you're, well, what's your current interest rate too? If your current interest rate, let's just give you a scenario. I'll make it all up. Let's say your current interest rate is 6.5, and you need $100,000 to do an ADU. All right, cool. Well, we know, well, we believe, we don't know. We believe interest rates are going down over the next year to 2 years. We believe they're going into the 4s. We believe that. We believe they're going, if not in the 4, you can buy down to a 4. So you're going to have to refinance that 6.5 at some point, which is your primary, and your HELOC's probably going to come in at 9. So both of those are going to be refinanced together in the 4s at some point in the future. I made all that up. I don't know if that matches. You let me know.
Ah, I see what you're saying. Okay, so it's a home. She wants a HELOC for a backyard workshop, 750 credit score. Should she wait for rates to go down? The primary is 3%.
Oh, at 3%, you probably don't want to move that.
Yeah,
you probably don't want to move that.
Makes a lot of sense.
So, I don't know if I would go HELOC. Let me think. Yeah, I guess. You're
No,
gonna
I
have to
wouldn't.
refinance that
I
out.
wouldn't.
You're gonna have to refinance that out.
Here's what I would do. I
Yeah.
would do a second. I would absolutely do a second.
So you can refinance a second, right?
One, you're going to refinance out of it anyway.
Uh-huh.
Two, it's going to have a better rate than a HELOC.
Mm-hmm.
So a HELOC gives you more flexibility, and it's for someone that's like, I don't know if I want 10 or 100 grand. Okay, HELOC makes sense. You only make a payment on that. But if you know you're going to pull the trigger on 100 grand, I would do the second. You'll have a smaller payment. You're going to refinance out of it anyway, and on some seconds, depending on where you go to, we might be able to have a little bit of a line open. So let's say your construction goes over by like 10, 20 grand, you might have that little bit of wiggle room.
Yeah.
So that's what I would do.
Paula Madrano says, wanting to buy a fourplex investment in Houston.
Houston, Texas.
Tips on minimum qualifications and type of loan needed. Okay, so Paula, there's a house hack in this side, okay? So the guidelines say that if you buy a 4-unit and you live in the biggest unit, you're allowed to go regular FHA 3.5% down. You can go conventional 5% down. Conventional 5% down or regular FHA with a 3.5% down. You can go, if you're a veteran and you got the ability, you can go VA as long as you're living in the primary residence and the guideline is for 1 year. So that's what we call house hacking, because you get to use the income from the other 3 units in order to qualify you for that investment property. You're able to buy an investment property as a primary residence. So that's kind of like the big hack of the system. Now, if you aren't going to live in that unit, then it is truly an investment property, 20% down. It's 20% down, and you're going to need reserves. Reserves are, hey, can I make my monthly payment for my primary residence and my investment property if I lost my job for 6 months? So let's just say your primary residence is $3,000 a month and your investment property is $2,000 a month, $5,000 a month times 6 months.
5 times 6, 30?
Yes. $30,000 in the bank that you can't use. $30,000 in the bank. That's called reserves. So it's a little difficult for the reserves portion, and that also applies for a second home.
Okay, right on.
Cool. What do we got?
Right. You're welcome, Elizabeth. You're welcome, Ash. Back to Esperanza. Yes, but we didn't have any contact with anyone but the Titans Manufacturing Mobile Home Place. Okay. So it's a manufactured home on land. Is it on a permanent foundation? So a lot of questions here. Jesse, how accurate is Experian for credit score?
It depends on who pulled it, Jesse.
I think he means like his credit card.
Yeah, Jesse. If you are doing it from your credit card, probably not that accurate. We all use different, they're called FICO models, and it gets crazy. I think there's like 60 different FICO models. Lenders use 5 or 8 or something like that. And it has to be pulled by a licensed loan officer, and that's going to be your mortgage rating. Now, there's 3 verticals: automobiles, credit cards, and mortgages. Each one of them have a different credit score because they gauge your ability and willingness to pay back their product. So if you've never gone late on an auto payment, then an auto algorithm is going to be good for automobile, but not good for mortgage. So they factor a whole bunch of things in there, and then they have all these really complicated models. They call them FICO Model 3, 5, 8, and then there's a bunch of different ways, but you need to have it pulled by a licensed loan officer, and that's going to be your score.
Yeah, kind of same for you too, Ash. Reading yours right now. 725 FICO 4 score, rate for second home, and down payment needed. So here's what's going to be for the FICO. You need FICO 5. So I don't know if the 725 is actually accurate. So like he said, you're going to have us pull it and figure it out. Rate for second home and down payment needed.
Well, the down payment's easy. That's 10%. You need 10%, and you need reserves. Don't forget that part. You need to be able to make your primary residence and your second home and have that in the bank and not touch it. Doesn't have to be used. It can be in a 401k, it can be in stocks, it can be anything, but you have to have it. And then your interest rate is going to be depending on your overall file. If your DTI is very low, your rate's going to be better. If it's not so good, it's going to be higher. No matter who gets a rate, no matter who gets a loan in this environment, just bank it. You're going to refinance at some point in the future. You're going to.
Okay. How accurate is Experian for credit score?
Yeah, we did that one.
Yes, we did.
Yeah, we did that one too. We're here to help you guys. Ask us the questions. We are going to help you. What are the requirements for a helicopter? Need to be pretty rich.
HELOC, man. Spell check. HELOC.
HELOC. Okay, cool. Where are we? Yes. Thank you very much for showing up. We see. What is that? A question there?
No.
Okay, cool. We got Facebook, TikTok, Instagram, and YouTube.
All right, Robin. Here's the requirements. So you need to own the home. Okay. You're going to be borrowing against money that you already have, and you need to have a 680 or better credit, and you need to have some equity.
Not helicopter. Got it.
Yeah, it's
HELOC. Oh, got it.
And you have to have some equity.
I was like, I don't know. I've never bought a helicopter. I want to buy a helicopter.
Me too. Gabriella, do you guys speak Spanish? I am able to express myself way better in Spanish. So the answer is yes. We have a Spanish speaker on our team. Text us Spanish.
Yeah.
And we'll get you a call back in Spanish.
Yeah. Absolutely.
Cool? How'd that work?
Broker of mortgages, what's up, fellas? What's up, broker? Great to see you. Welcome to our live. We hope to help you out, or if you know something, teach us.
Having a hard time finding a VA lender for 590 mortgage FICO in Oregon, said Crystal.
Crystal, you're having a hard time finding a lender? A lender?
For 590. That's her thing.
590. Well, okay, so Crystal, here's something you should know. First off, the VA has no FICO requirement. There's like literally none in the guidelines. So you can have the worst FICO score ever. The VA is residual driven. A residual is a special calculation on the back end of a VA loan that ensures that the veteran can make their payments. That being said, your history will factor into the decision. It's not, hey, I don't ever look at my history, because if you have a 590 FICO, you did something bad in the past, and we have to figure out what that is. But the VA is probably going to be the best loan you can do it. Now, here's what happens. If you get a broker that is not VA direct, they have something called overlays, because brokers, you have a low-level broker where they don't trust you with a lot of money, and they don't trust you to really push the edges on a loan. So you have heavy overlays. As you become a bigger broker, your overlays become lighter and lighter and lighter, and eventually you get to the spot where you're a direct lender. If you're a direct lender, then you underwrite as if you're the VA, and you don't have those guidelines. So if you're having a hard time, it's because you're running into brokers that have those overlays. You need to talk to a direct lender. We are VA Direct, New American Funding, all 50 states. We're VA Direct. There's a lot of good VA lenders out there. On TikTok, I'm finding a bunch of them. Kind of fun to watch. It's really fun to watch. I enjoy it.
Time for commercial.
Okay, cool. If you need a badass loan, call a badass loan officer. You can reach a badass loan officer, Chris and Lee at New American Funding, by screenshotting what you see on the screen right now, and it's going to disappear in 5, 4, 3, 2, 1, bye.
Boom.
Thought of buyers asking seller credit to buy down the rate. Karen, the only time I would really like that, if it's a 2-1 buy down and only occasionally, I'd rather have it a principal reduction. I'd rather have a principal reduction than an interest rate buy down, because let's say you use $10,000 and that $10,000 buys down the rate. That's great. But let's just say that the break even is at 50 months, 50 months, 50 months. So if they refinance anytime between now and 50 months, they lost that portion of the buy down. There was no need for it. But if they did a principal reduction, the principal reduction is locked in and it's good to go.
No, it's okay, man. Keep going.
All right, cool.
We're looking to get a house in California. Gabriella, call us. Let's get it. When y'all check out anyone's credit score, how much does it travel besides y'all?
Oh, good question, Esperanza. Okay, so we don't tell anybody. If I pull your credit, I'm not going to tell anybody. I'm going to tell him, and he's going to tell me. Yeah, okay. I'm not going to tell anybody. But here's the problem. The problem is that Experian, TransUnion, and Equifax immediately sell your data to a bunch of other loan officers, banks, not loan officers,
bottom
banks, and they're called trigger leads. And because a mortgage loan officer pulled your credit, they go, so they're looking for something mortgage related, and then they say, who else would like to buy this? And they sell your data. So we don't take you anywhere. We don't tell anybody. But TransUnion, Experian, Equifax do, and I hear from my clients, they get crazy calls. They're like, hey, Lee, what happened? I got 14 calls in the last 2 hours. And I'm like, yeah, it sucks. I can't do anything about it. Just tell them, bye, thank you. It goes away in a couple of days, but it does happen.
Wow, that's easy.
Cool. Where are we, man?
I'm looking. Okay, home equity loan, backyard and workshop, credit $750. Should I wait? We already kind of talked this
cool.
one. Her primary is 3%.
3%.
She's not touching
Yeah,
that.
good for you. Don't
Doesn't
touch
want
that primary.
adjustable.
Yeah, don't.
So a second.
Yeah, it's gonna be a second. Yeah, no doubt.
Esperanza, Titan manufacturer mobile home place in Odessa. I don't know how they did everything because they didn't get a hold of her. Dang,
Okay,
you got
yeah.
messed up, Esperanza.
Yeah.
Do me a favor, just text us.
Yeah.
We'll dive in more and see if we can help you. Robin Dawson, after a death in lieu.
Deed in lieu.
After a deed in lieu, how many years to buy a home?
So, if you were never late on the payments, then you can buy immediately. But usually this happens because you're either short selling or you're not making the payment. So sometimes things short sell, but they made the payment all the way through, and because they never missed it, but the short sale happened immediately. But if you actually went through deed in lieu, that's 2 year. If there's a loss to the bank, I think it's if there's a loss to the bank, it's 2 years. But it boils down to, did the bank lose money?
Yeah. Miss Zam76 does owing the IRS currently on a payment plan affect a loan qualification?
Only insofar as I have to calculate the monthly payment in, but as long as you've made 3 monthly payments, we're good to go. If you voluntarily walked into it and they didn't put a lien on you, all I need is the agreement. That's it. Agreement, maybe 1 payment, we're good to go.
Yeah, that's easy. Esperanza, they didn't know anything. They didn't explain anything to us, and I didn't know. Yeah,
Okay.
well, I'll tell you what, Esperanza. We've had buyers that ask us a lot of questions and
Yeah.
they get all answered. Even
Yeah.
very difficult, detailed questions with a lot
Yeah.
of explanation and drawings and graphs, and we'll answer all of them. So, yeah, you're right. You should know the answers to that. You're welcome, Miss B. If my home was appraised at $80,000 and I purchased it for $50,000, how can I cash out refinance?
Okay, user 775. Probably got bad news for you. Here's why. Because in the Dodd-Frank rules, there's something called an HPM. That's high price mortgage. And they made it so that the fees and costs can't be bigger than a certain percentage of the loan. And that number usually caps out about 90 to 100,000. So most banks shy away from 90 to $100,000 loans. So if you're trying to get 80, you're going to be below that. Then the other part of bad news is if you're trying to get cash out, most cash outs go to 75 LTV. So if you're 80,000, we do 80,000 times 0.75, and that minus your $50,000 note, that's how much you'd have to get out, and then subtract fees. You're probably not going to get anything out of that. So kind of bad news. Hope I can get better news, but that's kind of what it is.
Crime City Roleplay, share the live. I like that.
Crime City Roleplay. Thank you, Crime City.
19,000. I don't understand why. 48,000. Yeah, call me. We'll figure it out, Esperanza. Val Munoz. How can I sell my home to buy another? Needing those funds for the new home? How does that work?
Well, first off, you need a great realtor. Great realtor. And you need a great loan officer. Okay? You'll see the great loan officer. I'm a great loan officer, NMLS 944254. He's a great loan officer, NMLS
1066958.
1066959. You'll see it show up here, and you can see it at the top of our TikTok. Somebody put that in, so I kind of threaded it in there. But I can tell you that if you're going to do what's called a contingent sale, which means you're selling one and buying another, you need a realtor who understands this, because I'm going to need the closing disclosure from your selling to take that money and move it over to the opening, and the whole thing has to be orchestrated properly. So you absolutely need a good realtor.
All right. Angel just got pre-approved for a mortgage today.
Congratulations, Angel. Good for
right.
you.
Are you shopping with one of our agents, Angel? Did we hook you up with someone good? Blake Weaver, saw it on the screen. Compliance might need to see it throughout the whole show.
All right, cool. Appreciate it, Blake. You work for New American Funding? Opt out pre-screen. Opt out pre-screen. Opt out. I don't know what that means. Blake, I don't know if you're in the business. Appreciate you, man. Thank you very much for being here. Have a 490 but 50K down. Can I get a loan? 490, probably not, Lorenzo. Probably not. Here's why. You earned that 490. People don't like when I say that, but it's true. You earned that 490. They don't just give you a 490. Somebody offered you credit and you didn't pay them back on time or on terms, or you did something and they said, hey, this person's not doing it right. Then you did it again and you did it again and you ended up with a 490. Now you can't go to a bank and say, hey, can I get $500,000, please? They look at your credit score. Your credit is your history and your ability and willingness to pay back your loans. So the first thing we need to do is address that 490. We need to get it up. Usually you can hire a credit repair company and they'll say, hey, listen, this is what all the things that we need to do. And then pay your bills on time. And then your credit score will go up. You'll get a house. Happy ending.
Yeah. 50 G's to get you all that.
50 G's to get you all that.
Why not do a soft credit pool?
Because soft credit pool is a bunch of bullshit.
Can I get a second with 610?
You like that? No.
Daddy Bray, I have a 8-plex.
Let me go a little deeper. Soft credit pool. So let's just say you have 3 FICO scores. One's 800, one's 700, one's 600. If I pulled all 3 of them, I do a tri-merge and I get rid of the high and the low. I get rid of the high of 8, I get rid of the low 6, and I keep your mid of 700. But let's just say I did a soft pull and I only pull 1 bureau and it's 800. And then I start you shopping at 800 and you have this unbelievably low rate that you can't get. And then I get you into an escrow and I do a hard pull and we find out, hey, your credit score is way lower. Or the other way around, 600. I say, you can't qualify. You don't even meet the 620 FICO score. And I say, you're not qualified. That's a soft pool is only 1 credit line and you can't tell enough with 1 credit line.
You got Miss 19. I don't really know who it is.
Oh, cool.
But what happens if you're going through the process and get laid off?
Oh, good question. Very good question. It happens. It happens. First off, tell your loan officer like right now. The minute you get laid off, call your loan officer.
Dude, your phone's ringing.
Because it's going to go, yeah. What? Okay, so the minute you get laid off, call your loan officer. Why? Because he's going to go, okay, shit, I need to figure out, am I locked? How long before you get a job? Can you get a job? Are you highly employable? Some people can get a job within a week. And if I say, cool, you're laid off for a week, we have 30 days left in the escrow, no problem. Go get that job, get me the offer letter, and go to work. No problems. But if we're right to the close of escrow, I'm immediately going to call your realtor and go, hey, somebody just got laid off. Can we do an extension on escrow? Is it a good idea to do an extension on escrow? How much is in the EMD? Is there a lock in here? Are there lock costs involved? And we're going to strategize while you get back to work. You cannot close your loan if your loan was dependent on your income and you get laid off. So call your loan officer immediately.
Daddy Bray, I have an 8-plex going for $880K. Rents are at $950. I pay for water only. Is this worth it investment? So, it's not going to be regular real estate if it's an 8-plex. It's going to be commercial. It's not going to be your same terms with down payment, FICO, and all that stuff.
Yeah.
But 8-plex for $950 a month, $950 a unit. I think that's fantastic.
That sounds amazing on paper. Fantastic. It sounds amazing on paper.
Yeah.
I can tell you that we're licensed loan officers. We go through regular loans. That's conventional conforming loans, VA, FHA, Fannie Mae, Freddie Mac, USDA, a few others. But that only goes to 4-unit. Once you break into 5-unit, you go to commercial. It's a whole different game.
Well, VA allow extra money on a loan for repairs when buying?
So VA has a special loan. They do have provision loans, and there's a 203K that you can tie up with the VA loan. So they do allow for it, and there's actually programs that make it happen. We can help you with that.
Dang, the pressure valve broke, Esperanza. Got a lot of drama in
You got some stuff going on, man.
Laughing my ass off. How do you not offer 80% LTV? Huh?
How do you not offer 80%
Menards.
LTV?
I don't know what you're talking about.
Maybe he's talking about the cash out refi at the 80,000 down with 50,000. Yeah, he might be talking.
He's doing that math?
I think so. Yeah, I think if you're doing a cash out,
Menards, explain what you mean by that.
Yeah,
because we do 80 LTV.
Yeah, we do 80 LTV.
50 LTV.
The scenario, the scenario I was talking about earlier was 80,000 with 50,000. It's going to be an HPM. If you're a LO, you know what I'm talking about. Once you HPM, it's a whole different game.
What can I do to help my credit score go up?
Pay your bills on time. Keep 30% of your credit cards used only. Don't use all the way up to 100%. And lots of trade lines.
There you go.
Yeah.
Joe, can I get a second loan with my credit of 610? My house can appraise for 656. I owe 478.
Nope.
Nope.
I want a second opinion. What do you think?
No.
Okay, cool. You want a second opinion?
Yes.
Nope.
There you
Nope.
go.
First off, your Fannie Mae, Freddie Mac are going to start at 620. Just that's where they start. But if you go into the second category, if you're looking for second home, anything 680 is kind of your magic.
680
Yeah, 680 and over. So not.
They sent me a check with my name and my husband's name at A+ Credit Union. What does that mean? I don't know, Esperanza. Call me.
I don't know. It sounds like whoever was your representative, sounds like you bought like a new build or modular, and you should have had a representative who was supposed to help you, and most of them are licensed. Most everybody, like I have to have a license. Whoever helped you had to have a license and had to know what they were doing. So, or get a lawyer and he has a license.
Thanks, Blake Weaver.
Yep.
Daddy, Lorenzo, you definitely get in on owner finance. Maybe.
Yep.
Renard, do you offer less than or greater than? Less than 620 cash out to consolidate debt?
No. Well, wait a minute. I got to be careful on that.
Offer?
So I'm going to say less than 620
No.
FICO. So
No. Well, guideline says you can go down to a 580.
yeah.
But
But.
from our experience,
Yeah.
it doesn't normally work.
Yeah.
Especially if you're trying to take money out. And if you have less than a 620, there's going to be some derogatories in there.
Yeah.
And the bank's going to go, you want to take out $20,000, but you haven't paid these debts?
Yeah.
So it's a weird situation. So the guideline says you can, but I'd like to look at it and
We'll
give
give
it a shot.
we'll give it hell. If
Yeah.
it can be done, we can do it.
Yeah. My office. Ooh, it jumped in.
Dude, what are you doing?
Dude,
I'm
that
trying
means
to
a
answer all the
bunch- that means a
questions.
bunch of people
I
just
want to
hopped
answer
in
all
here,
the
dude.
questions.
Like
Yeah.
2 million
Lorenzo
people.
says badass. Yes.
My office offers tri-merge soft pools. Why do you think that's bad?
Tri-merge soft pools.
He didn't say that the ability to do it is bad.
Yeah, if you're doing a tri-merge, good for you, man. Yeah, tri-merge, good for you all day long.
Yeah.
Yeah, if you're an LO, man, I appreciate you. I do. I appreciate you.
Daniel, not all soft pools are one bureau.
Okay, fair enough. Okay.
He said
Ryan,
ours.
1 million. You know what Ryan's wanting? He wants 1 million, man.
OTSC, yes.
Yes, 950.
That's
Yeah.
badass,
Okay,
Daddy.
yeah, that's pretty good. Yeah.
Doesn't everyone?
Doesn't
There's
everyone
one way I can lower down payment.
lower down payment? Well, lower down payment.
Which way I can do it? So, do you own a home at all? If you don't own a home, it's going to be your first home. There's down payment assistance programs.
Yeah,
man.
you can go zero. Actually, in California, there's a program called Dream for All where they'll get you 20% of the down payment. Nothing out of your pocket. They'll get you 20%. So if you're buying a $500,000 house, they'll get you $100,000. $100,000. No kidding. $100,000. But there's a catch to that, and there's a catch to all the down payment assistance programs. The catch to the Dream for All program is they want that $100,000 back, and they want it with appreciation. That's the catch. When you refinance or sell. There's more to it, but here.
Do you work with first-time investors?
Sure. If you're an investor and you want to buy a property, well, I'll give you the next set of questions. How much is the down payment? 20%. If you're a first-time investor, you probably don't know that. If you're an investor, that's what you're doing. You're investing. Got to put money down. You can't invest the bank's money because that's not an investor. You're investing, so it's 20%. If you're you're not going to get away for zero down. You're not going to get 3%. You're not going to get 5%. You're not going to get 3.5% if you're doing an investment property. So that probably saved a whole bunch of conversation.
Yeah, good job.
All right.
Daddy, getting into this commercial, by the way. I'm in Texas. That's
All right,
good,
cool.
man. Let us know
Yeah.
how that one goes.
Yeah.
Who's your daddy? Who's your lender?
Who's your loan officer?
Boom.
Cool.
Renard, you can get 80% on the FHA 30K. You can get 80% on the FHA 30K loan.
Okay. All right. Right.
Okay. So we're in California. Our loan amounts are different.
Mm-hmm.
So if you have a specialty for that, that's awesome.
Okay.
Esperanza, right? Who is the loan officer? Because I don't have one. I don't know, Esperanza.
Yeah, I don't know. That was your
situation's so
transaction. Yeah.
strange.
Whoever you called and you wrote a check to, that's who you need to be talking to, and then find out who their license is, and then find out who their governing authority is. Because it sounds like you got a little bit of a lemon.
Yeah.
And it sounds like yours is a very unique situation. So you gotta, whoever you wrote a check to, that's the thing.
Talk to the manager.
Yeah.
Start with the manager.
Yeah.
Thank you,
follow
MPG.
the host.
Thank you, Sandra. Thank you,
Deborah the billionaire. I love that. Shoot, Deborah. If you're
So,
a billionaire,
you need a down
yeah,
payment
if you don't need a. If you're a billionaire,
Yeah, Deborah
you
the
don't need a
billionaire.
down payment. Cool.
I I didn't have anyone to explain it. I know. No, I get it, Esperanza. You got in a bad situation
yeah, it
with some
sounds like
people
it.
who aren't
Yeah.
very good at what they do.
Yeah.
So we'll help you. You just got to talk to those people, figure out who you need to talk to, then we can guide you.
Cool.
Millie, jumped on me. That means a bunch of
I
people
know,
hopped in
dude.
again.
What's going on?
Can you guys explain how a HELOC works
You
with
go.
the debt ratio?
Okay, cool.
So the thing about HELOCs is there isn't an exact debt ratio. You can go up to 95, but you can do a lot in between. But even those that have a very low ratio don't get approved. Those that have a very low ratio doesn't mean they get the money. So it's a different process and a different situation that they go through to approve it. That being said, as long as you have decent credit, which means like a 640 or better, as long as you have a low enough ratio, it doesn't have to be zero, just low enough, you should be able to get approved.
Yeah.
And with the HELOC, it's like a credit card. So if you ask for 10 grand, you don't have to use the whole 10 grand. You can use 2 grand. You can use 5 grand. You can use as much as you want. So it's a different process.
Yeah.
But as long as your credit and debt situation is okay, you should be able to get one. Crystal, HELOC versus home equity. Same thing.
Yeah, same thing.
Same thing.
Yeah, HELOC, home equity.
What about Texas, brothers? We do
What about Texas? Dude, Texas. My primary residence is in Texas. We just closed the loan in Texas today. Yes, we love working in Texas.
So we do all the loans. When we talk about guidelines, it's
Yeah.
national. It's not
Yeah.
just for a certain state, Daddy. But I think you're talking about when I said we don't do 8 unit, it's going to be commercial.
Yeah.
You can still go through us. It's just not going to be our hands working on it.
And we do all 50 states. New American Funding's a pretty big bank. We do all 50 states, and their kind of claim to fame is they don't sell off their paper by and large. Occasionally they do, but most of the time they keep their own paper, which means they service it, which means you're not going to be sold to Mr. Cooper, to whoever else, servicing companies, and that helps a lot. Just your long-term stuff.
Jonathan says, smartest way to reinstate our loan to lower my mortgage for my new house, minimum down first. I don't know.
Reinstate our loan. That's a technical term. Reinstate our loan.
With a new house.
Lower mortgage for my new house. Minimal down first. I don't quite understand what you're saying there. So if you could ask that different, because reinstate means that your loan has been taken out and you have to reinstate it. So that happens on bankruptcies. If you declare bankruptcy and you put it in the bankruptcy, well, then it's taken out of the system, but then you have to reaffirm. It's actually called reaffirm. And you reaffirm it through a legal process, and then the bank says, okay, you're still taking this, I'm still doing this, we're good to go.
Okay, Rami, but if you can do 5% on a multifamily Fannie Mae, you should mention that.
Yeah, all right, cool. You're
Thanks,
right.
Rami.
We can do 5%.
We can do 5%.
Yeah, we can do 5% on a 5% 4 unit. That's it. Can't do it for 5 unit
We'll
though.
talk about all the other stuff we haven't talked about too.
I'm wearing cufflinks and
Okay,
they're
cool.
levels. Yeah, they're levels.
Call Nice or Kelly Nice. Yeah, we're in Kelly. It's
Yeah.
cool. It's all right. Esperanza. So if they purchase all that money, why do they think they want to have to pay it back? I don't know.
I don't know what you're talking about, Esperanza. You're fun
I
though.
hope you didn't get scammed.
I hope you didn't scam.
I
dude.
hope you didn't get
really
scammed.
hope you didn't get
Because
scammed.
it sounds like there's a whole lot of moving pieces, and
Yeah.
you don't know very much.
And your house is falling apart based on what you said.
So
Yeah.
I hope you're okay.
Yeah.
You're welcome, Millie. Esme, can you still get approved for a house if you have a personal loan?
Well, yeah, your personal loan gets factored into your debt to income ratio, and then we just figure out if you qualify. It could take you over, but could not.
But answer Connor. Who shot Kennedy?
I don't know. That's a crazy thing because I thought, you know, have you been to Dallas? You've been to Dallas, right?
No.
I went to Dallas where they shot it, and where the shot happened, and it's this crazy situation. And there's still to this day people peddling like, would you like to see the CD of what really happened? Would you like to buy the book on what really happened? And they make very convincing
on the street?
argument.
Like, this is where he
Yes.
stood.
And they do tours. Wow. They're like, oh yeah.
That's a small area, right? It's not that big?
It's not that big, and it's pretty
And
cool.
the observatory, how many stories is that? It's like 8? It's not
Yeah,
that high,
something
right?
crazy. And you could literally go to all the spots. They make all the spots tourist spots.
Wow.
Strange.
Like the grassy knoll, like
and
stand
then
right here.
everywhere you go, somebody's playing a video of the shot. And you're like, okay, yeah, what you're saying makes sense. I can't dispute that. I can't dispute that. And then now that Kennedy's running for president as an independent, ooh, things are getting weird.
Strange.
Things are getting weird.
Ready to wrap this, dude?
Well, bro, I got scammed. I don't know how I got
I
scammed.
don't know why you get scammed. They
I ended up
never
having
had
to
it.
sell the house, but they had to get me scammed out of 45K after. I don't know what that means.
So you got your money
sorry
back,
to hear
sounds
you, Daryl, on TikTok. I am so sorry to hear that. We don't like to hear about people getting scammed. We're trying to help people not get scammed and get a house in 2024.
Screenshot.
If you want to get a hold of a badass loan officer, you can call the badass loan officer phone numbers on the screen right here. In the meantime, we appreciate you. We've been Chris and Lee. We are out.